Hello and welcome to another Trades and Tutorials video. This is Jeff Bish, president of MarketGauge.com, and in this video we're going to take a look at the Japanese stock market and a couple ways to play it. It's at a really interesting place here, and what really grabbed my attention was the fact that the Barron's, the cover of Barron's this week, was a big cover story saying time to buy Japan. As it turns out, our ETF models have been in Japan for quite a number of months, and there's another reason to be focused on it technically right now as well. So this really caught my attention, and so let's take a few minutes and look at Japan. But before we do, if you're just finding us on YouTube, make sure to subscribe to our channel. And the other way you can find this video, if you're not already there, is to go to marketgauge.com/tutorials. There are a bunch of other videos as well, and if I make any references to any links that I may leave with this video, that's where it would be. And finally, just to make sure that you know, you can watch this video in HD by setting the HD setting in the lower right hand corner. There's a little gear, use that, set it to HD, and it'll be a lot clearer. All right, so with that, let's take a look at the ETF for Japan. Now there are two, EWJ and DXJ. The difference is that EWJ does not compensate, it's not hedged for the currency, whereas DXJ is hedged for the currency. And I'll talk about the effects of that in just a second. Essentially, you can trade them more or less the same way. And I'm just going to focus on technically where we're set up here. Like I said earlier in the intro, our ETF models have been in it for quite some time. So our country ETF, our ETF complete model that trades ETFs based on a relative strength measure, not based on any kind of moving average indicators, got in around the end of I think the end of March, actually, January, February, March, around in the middle of March. Sorry, the beginning of March, the 9th of March, right around here. So I've been watching it for a while as a result of that, and it just came up here on another phase change alert that we have, and now it's coming up again as a phase change alert right here. Now we track for the most part the EWJ, which is not part of, it's not hedged, and part of the reason for that is it's been around a lot longer than the hedged one, and so that's the one that we carry in the models. But the reason that it's interesting according to Barron's had to do with the Prime Minister now seemingly being effective at getting changes in the corporate mindset in Japan. Without going into the whole article, it's an interesting article, but the argument was that from a longer term view, corporations may start to actually become more profitable. So that's all well and good, but that's really hard to trade around. The thing that we want to look for are key points in which we can trade, and if we've got some big fundamental tailwinds, well, that would be great, right? Because what we're really looking for is to catch a situation where it goes from kind of consolidating, or at least this is what we look for, consolidating to a nice trend upwards. Now, the reason that this may be the case now is a couple reasons. First, from a phase point of view, and if you want to learn more about phases, please go to marketgauge.com/tutorials. And you'll find some information there. But from a phase point of view, this is the 50-day moving average. Broke down through the 50, gapped up through it, but only one day, couldn't really hold, and then had a pretty strong sell-off all the way to what is the 200. Now we did that in both the unhedged EWL and the hedged DXJ. All right, the pattern has been more or less the same. What brings it up as an alert in our phase change model is that it's now coming back over the 50. And when it does that, we put we identify a stop below the 50, and we look for a close above the 50, and then another close above the 50 for confirmation. And that's a good I mean, I'm giving you a really general description. If you're a member of our ETF Complete, you'll have a much more specific, or ETF Country Plus products. You get much more specific entry and exit criteria. But essentially, the idea is that you want to look for a break back over the 50 with a good stop below it, and you're looking for a major trend change. Now, the thing with the Japanese market, and because we've got hedged and unhedged ETFs, if you don't really want to worry about the currency and it gets too complicated, the shortcut is to just look at both. And if they're both doing the same thing, then I don't know that there's a right answer or a wrong answer in terms of which one you want to trade, because the answer to that is basically you deciding whether or not you want to play the currency as well. So if you don't want to get caught up in that question, then trade the one that looks the best on the chart. Right now, I would say that's the EWL, but because it's breaking above its 50, but it's really so marginal because the DXJ is just about there, and the DXJ's 50 is actually positively sloped. So I don't, at this point, think it makes that much of a difference. However, I will say that the DXJ in general has been stronger over the longer term. All right. So a pure bet on the Japanese market would be DXJ, and what you're going to do is look for it to break that 50 and then put in a stop below the 50 and below some daily lows. And the idea is that this is the resumption of a much bigger uptrend after a really nice and I don't want to say total flush, but you know, the market's got pretty dumped on fears over Greece, and now they're coming back, and Japan looks quite strong. All right, so when I say this is a correction in a nice big trend, this is the big trend I'm talking about. And as you can see, EWJ really, if we scrunch it out, has a really nice pattern in which it just came back down to this big breakout level, and sort of to look at this as a flag on a longer term basis. Again, I'm not looking at this for the next couple days, not even the next couple weeks. This could be the next couple months. Big break to the upside. Just happened to line up with what Barron's is saying. Barron's isn't going to time anything to the week or probably even to the month either. So I thought that was interesting. So before I let you go, if you're interested in the currency and the currency's effect, I put together a quick graph. Now this is a weekly chart, and it'll give you an idea of how the currency can impact these two particular ETFs. So the orange one here is the hedged. That's the DXJ, and we're going back to the end of 2012. And the reason I picked 2012 is because the blue line here is the U.S. dollar versus the yen. So when the dollar gets stronger and buys more yen, this is going up. And the yellow line is the EWJ. So in this time period, right in the beginning of 2013, there was a massive run. The dollar got really strong against the yen. You can see that it went up about 30%. Now, at the same time, the Japanese stock market, as hedged, went up almost 70, let's call it 70%, a little over 70%. At the same time, the EWJ, which is not hedged, went up about 30%. So when the currencies really move, it does make a big difference. And if you're on the wrong side of the currency, so in this case, the EWJ still went up nicely, but that was because the overall market in Japan really roared, and as a result, the EWJ went up despite the strength in the dollar. So then you can see that, again, this is a weekly chart, so it's big perspective. You can see that they pretty much ran in lockstep all during probably about the next following years, all about the same, because the currency really wasn't moving that much either. Then the currency had a pretty nice move right here, and here's an example of the currency has a big move. The EWJ actually goes down during a period, the same period when the DXJ goes up. Big move in the currency. All right. So then the market continues to move higher in a flat currency environment, and EWJ goes up just as well. So now we're sitting here, is the currency going to stay flat? If it stays flat, it's not really going to matter which one you go in, they're both going to go up. If what I'm saying does hold true, that they break the 50 and move higher. All right, so I don't want to make it complicated, but that's a big picture. That's what it looks like. If you want a pure bet just on the stocks, go with the DXJ. If you think the dollar is going to weaken, then you got a little bit of a benefit to go with the EWJ. So I hope that helps, and I'll see you in the next video.